huge long uptrend, when you see a candle of this nature, typically what follows is a change in trend. And everyone is aware of that. The psychology is really simple. The price action is daunting. Now, if you're looking for new longs, this is the kind of thing that you don't want to go anywhere near because it needs time to work that pattern off. And by the way, today's high up 35 points where it opened and then closed at the low. Not only is it bearish engulfing candle, it's actually what they call a Maruboza. You don't want anything to do with that as well.
Hey, that was a beautiful description, and of the technical setup. And Josh is not even alluding to the sentiment right here. I mean, that was really, really ugly, that reversal. But to me, you have a situation here where the shorts have been annihilated over the course of the year. When this stock was trading, $200 lower, there was 35% short interest. Now there's only 12% here. So to me, I think you can see a bear run on this stock down to that 50-day moving average about $300. And to Josh's point, the previous day's close was about $350, which was an all-time high then. That would be a pretty decent place to set a stop on the short side.
I would agree with Dan, and I would say where things could get really interesting is right over here. So I think is around like 290, 300 level. That's where the shorts were faked out. You can see they piled in. You had a nice reversal off of that. We might have to mark some time and get back down to those levels before you see confidence return.
I want to go to Mike, though, because I get the bearish engulfing candle. But at the same time, Mike, did the options market, in terms of the implied move on earnings, tell us that there would be a bearish engulfing candle the next day?
Did the options markets talk about a bearish engulfing candle?
No, they didn't. Because the implied move on earnings was going to be what? Plus or minus 11%?
Yeah, what was really interesting here, this is a name that actually typically moves quite a lot on earnings, and the options market has gotten quite complacent. Kind of to what Dan was talking about with the declining short interest, the options market had also sort of given up on really getting short the name, implying about an 11.5% move, when it, over the last 8 quarters, has moved significantly more than that. I'd highlight some of the activity we saw today. It looks like some desperation buying, weekly call buys of the 350 to 400 strikes, but actually the more institutional activity was happening on the put side. November 300 puts traded about 3 times its open interest there, so that was definitely interesting to me. When I used to be on the commodities floor and you wanted fundamentally to get short something, you had to wait for a day like this. The kind of sentiment shift where you would open on a gap higher and close lower. To me, this is probably the first inkling that anybody who's inclined to take this on the short side could start to participate. And I think maybe call puts calendars would probably be something like that. Good way to play it.
Mike, and I agree with you on the puts. They bought them all the way down to the 300 strike from about 360 all the way down. Even if they weren't exceeding open interest, they were trading big volumes. So I agree with you 100%. As far as the stock, Mike, there were also those big blocks. We broke it down, Juan and I over at CNBC broke it down by a 1-minute chart as well as a 5-minute. And on the 5-minute, you were seeing 1 million shares go off in multiple 5-minute charts, all the way down from 390 all the way down to 330. There were, I believe, nearly 12 or 13 of those 5-minute areas where you saw over 1 million share turnovers. This stock normally trades 2.8 million a day. So to see that in 5 minutes tells me if Carl wasn't getting out, that means State Street or somebody was getting out, Capital Research or somebody was getting out. This was not typical of somebody getting a short position on. This is somebody getting out.
Carl's been knocking on the exit door in the stock since it was $200, and I think he may have finally talked his son into letting him sell some. Because at these levels, I think he's probably said that we've taken all we possibly can here. Who could fault them billions of dollars later for taking off at least their initial investment, which would still be a big chunk?
I agree.
And Josh, do you see bearish engulfing candles for any of the other momentum stocks that we've seen declines today?
Well, nothing notable, but these things pop up, and once they do, what happens is the traders that are having fun with them, they take a step back and they say, wait a minute, something has clearly changed. I don't know what it is fundamentally, but the market is telling me that there's a difference of opinion within the holders of the stock. That's why they're worth paying attention to.
All right, and from bearish engulfing candles to the next
okay. Well, to quote John Bollinger, a fundamentalist thinks he's right. A trader thinks the market's right. So the market's always right. I don't know about these candlesticks. I wouldn't sell my Netflix just yet, but I would keep an eye on it. Bye-bye.